New data from Freddie Mac shows the critical 30-year fixed-rate mortgage, most popular mortgage in this country, has paused its recent steady climb, falling to 5.7% for the week ending June 30th. This is the first time it's fallen over the last month. I want to bring in Carroll founder and CEO Patrick Carroll. And Patrick, it's great to have you here. This kind of goes to the argument you've already made, and you've been on the show before, that it's all about the Sun Belt right now. That's where the opportunity is, and that's where people should be looking.
Yeah, I mean, I've been acquiring properties in the Sun Belt states since 2004. Since 2011, we've done over 20 billion in transactions. So, I'd like to consider myself an expert in the space. And what we saw early on was basically this is a lower cost, business-friendly, higher lifestyle type of living, So first, we saw companies starting to move. Dallas, Texas, Austin, Texas, Tampa, Florida, South Florida. With the jobs, obviously the people come. And then following COVID, everybody moved out of the big cities. Everybody wanted space. Everybody wanted, better weather. And so it's really brought a lot of awareness.
But now what's happening with mortgage rates, because we're talking a $500 difference on a mortgage. So somebody that moved to Florida and bought in Texas they're saying their mortgages jump, and their wages may not be jumping. And that's a problem. It's also pushing out new home buyers who are getting kicked out of the market now.
Yeah,
we're going to see a slowdown, I think, is my point here.
I think so, too. And I think people will be renting longer. I think rental housing is a viable option permanently. It allows flexibility, and it allows people to adjust and be in these areas but not be locked in by buying. So yeah, it's been a positive for our business.
The rent story is changing. Let's talk about that, because your company has been raising rents, but you were just telling me before we came on the air, by about 30%. Get ready for the hate mail. What are you seeing in terms of renter retention sentiment in the market? Because it's not just in the Sun Belt, like you're talking about, where you're raising rents 30%. It's also happening in Northeast cities as well, like here. Yeah,
it's a supply and demand thing. Obviously people are not thrilled to see rent increases. I think one of the important things to point out is our costs are going up. So as our costs go up, our costs of interest, our costs of renovations, our costs of our employees, we need to push those increases along through rent increases. Now, how long is that sustainable? I'm not quite sure, but it's been something where we've been able to retain. Our occupancies are all-time high. So we haven't seen any slowdown in that yet.
Are you seeing anybody that's out there, like homeowners, not necessarily in your company, but a regular homeowner that's renting out their home because they see a business opportunity right now, because people that can't buy are realizing they're going to have to rent?
Absolutely. I mean, that's actually how I started in the business in '04, was buying single-family homes and renting them out. And it's funny, I'm getting ready to launch another part of my business, which is single-family for rent. So it's almost come full circle. But yeah, I think between Airbnb and just buying homes to rent them out, it's a great way for people to get into the real estate business.
It's interesting. Well, and that's how you did it. You're right. Let's talk about labor supply costs as far as new construction. Home builders are trying to catch up. We know that they are. They would love to build more homes because we still have low inventory across the country. But those inflation costs obviously are a factor. What are you seeing out there?
The supply chain has kept construction down, and costs going up make construction a little bit less viable. So we are seeing a supply-demand imbalance. There's not as much affordable housing for people that want to move to these areas. So, home builders can't keep up, and they can't make the numbers work. And now they have a lack of buyers because of the mortgage rates. So again, this has all kind of been perfect storm for the multifamily business, that we've been in since 2011.
I got to ask you, because I get asked this all the time. Where do you think mortgage rates are going to be at by the end of the year? Because every forecast in January has been completely wrong.
Okay, well, I'll put out a wrong one, too. They're going to be higher. I think they're going to be higher. I think the Fed's going to get a little too aggressive on rates, and then have to pull back. So by the end of the year, I think they'll be higher.
Okay, could we go with like a 6.5%?
Yeah, I'll go with 6.5 on the 30-year.
You'll throw it at 6.5% on the 30-year. Well, that's better than what other people have been saying, which is 7 and 8%. My parents, I remember, paid 14% back in the early '80s. So we don't want to get there.
Hopefully not.
Yeah,
it'd be good for rental, but yeah.
Which is your business. Oh, Patrick, it's great to have you on set in the studio. Thank you.
It's great to be on set.
Yeah, thanks for coming in, sir.